Well, let's get it stuck into retail sales numbers. Out today, as Ed says, though, the sales for May surprised by rising 0.7%. It was $35.5 billion in May. It was supported by a range of events such as Mother's Day, Cyber Monday, and perhaps even more disturbing, many retailers bringing forward their end of financial year sales. But just one curiosity to note, those monthly sales are almost 28% higher than they were back in February 2020, just as the world went into COVID. Sean Langcake is the chief economist with Oxford Economics, and he joins me from our Adelaide studio. Sean, many thanks for your time. I just want to go to those retail sales numbers. Effectively, people are covering the inflationary price rises, but they tend to be buying less volume. That seems to be part of the story here.
Yeah, absolutely, Ross. I think we had a bit of a fill-up this month from that greater than usual discounting activity that induced people to bring sales forward. But, because it is just a shift in the timing, I think that's going to contribute to a softer print next month. The numbers are getting a bit of a boost from inflation pressures, but you're exactly right. The broader trend here is that people are lowering their purchasing volumes.
Okay, and the one thing that's always the key here is discretionary spending. It's not the things that people seem to feel as that they have to have. It's the stuff that they, have to make a decision about. That's the thing that really seems to be dropping like a stone.
Yeah, quite right. I mean, within the retail sales data, we have very little choice. We're always going to buy food at the supermarket, but things like, home equipment or furniture or electronics, clothing, they're the things that we have more control over when we purchase it. Now, May was a pretty good month after a string of outs for things like household equipment and spending at online retailers, and that's related to the sales events. But we're seeing a lot of weakness in clothing and sales at department stores, which is, where we're seeing people tighten the purse strings.
But it is a bit strange. So Jerry Harvey yesterday reports that really, times are a bit tough. Consumers are really pulling in their belts. Then the day before, you hear Qantas effectively saying, well, actually, people are spending on travel. They're foregoing other things, we think, but they're still prepared to spend on travel. And you kind of pick this up a bit out of these retail sales as well today, don't you? Cafes and restaurants, people are still prepared to spend there.
Yeah, look, there's a very big pivot going on as we kind of unwind the patterns that emerged through the pandemic. So, spending on services, which is where, spending on flights and holidays and these kinds of things that Qantas are picking up on, that's still relatively strong because we have all this pent-up demand that we couldn't satisfy. We couldn't leave the house for such a long period of time. But on the retailing side, when it comes to goods and things for the home, we went on a bit of a splurge for the last couple of years, and there's a bit of an unwind. So, retailers are kind of facing dual headwinds here because they've got that process unwinding, but more generally, we know that consumption growth is slowing. People are starting to feel the pinch when it comes from fast inflation, but also higher interest rates. So, I'm not surprised that you're getting those comments from Harvey Norman. It's a really challenging period for those kind of retailers.
So just one thing here, Sean. Of course, the Reserve Bank has been raising interest rates as there is quite clearly tangible evidence that the economy is cooling. That's normally something a Reserve Bank, a central bank, does not want to do. Yet it seems likely, even though inflation might have been coming off on that monthly basis, the underlying inflation was still stubbornly high. So the bias is still for the rates to rise, I would suggest.
That's right. I mean, you're right to point out that inflation has peaked and is coming down, but we're still talking about rates that are, in the ballpark of 6%. The Reserve Bank won't be putting nearly as much weight on the monthly indicator as it would the quarterly number. Equally, I think the number that they would latch onto out of yesterday's print is the core inflation, which really didn't budge at all and stays above 6% year on year, as opposed to that headline number, which did come down due to fuel prices. So we're still in a situation where inflation is far too high. I think the RBA's bias coming out of the minutes from the last month is that they still want to see rates go a little bit higher. They think they'll need to do that to see inflation come back down in a reasonable time frame, as they put it. I'm not sure that the data over the last 2 days really moves the needle there. So I think we're set for another couple of rate hikes over the next couple of months.
And Sean, just very quickly, I don't have much time here, but recession or no recession, how bad is the economic downturn in Australia?
I still think no recession. We've got some really strong kind of insurance against that just from population growth alone. But, if it's not a recession, it's still going to almost feel like one. We're going to have very patchy growth over the rest of this year, I think.
Sean Langcake, many thanks for your time.